So first of all will be sectors that are benefited from the Trump's potential policies, like I shared earlier. All this deregulation, tax cut, tax reduction, move manufacturing back to US, and also at the same time, all these deregulation of finance sector, crypto. I'm Chye, a financial market analyst and coach at Beyond Insights, and this is your express session to get up to date with the stock market. Since we are doing this over lunchtime, hence we'll keep it to 30 minutes. I will start the timer when we start. We'll cover the market highlights, major stock market indices performance, and the upcoming potential opportunities and risks out there. So are you guys ready? You may type me in the chat if you are ready. All right, so let's start. Just an important note before we proceed, whatever we share here today is based on the latest data and facts. If there is further development, things may change. And we want to make sure that you know that we are not a licensed investment advisor and we do not manage customers' funds. We are an educational institution, so our purpose here is to educate people so that you can make your own decisions and be your own investment manager. That way, you have a better control over your decisions, hence be able to get better results. If you are looking for stock tips, this is not the place for it. All information we share here are meant for educational purposes only and must not be taken as recommendation to buy or sell. All right, so I'll start the timer. And as usual, let's start with the market highlights. So the SPY and QQQ. So for the SPY, is represent the overall United States stock market, which is the top 500, represent the top 500 stocks in the US. The SPY is the ETF that tracks the S&P 500. And QQQ, the Nasdaq 100 ETF that tracks the top 100 tech stock in the US, break all-time high after Donald Trump's victory in the election. So as we know, Trump won the election in the latest US election, and also at the same time, his party, the Republican, also sweep the Senate and also the House. So the Senate, the House won by the Republicans, and Donald Trump from the Republicans also won the presidential election. So what does it mean? It means that it's easier for Donald Trump to get his potential future policies to approve easier, because as we know, in order to get the policies to be approved, you need to go through the House, Senate, before it will be able to get fully approved. So with the Republicans sweeping the House and also Senate, so it will be easier for Trump to get his policies approved. And also, we noticed that the dollars were strong after Donald Trump's presidential election victory. So why dollar will be stronger after Donald Trump's victory? We suspect potentially is because of the potential inflationary policies by Donald Trump. For example, Donald Trump planned to have some tax reduction after he won the election, and also he also mentioned about tariff. So for tax reduction and tariff, do you think it's an inflationary policies or it will help to bring the inflation down? You may type your opinion in the chat. All right, so based on our experience, based on our view, it will be likely inflationary because, as we know, tax reduction may cause price to go up as well because people may have more disposable income to spend. And also at the same time, tariff usually ends up consumer need to absorb the cost. All right, and with the potential inflationary policies, people do anticipate that inflation may rebound. And this may also slow down the Fed's rate cut. So at the same time, during this November month, we also noticed that the FOMC rate cut are in line with the forecast. So the last FOMC, the Fed proceed with the 0.25% rate cut as per market expectations. So we don't see much market reaction from the FOMC decision. And lastly will be the second last will be the China stimulus. So as we know, China has been launching a lot of stimulus campaign to the economy. They are trying to push up the stock market. They has been introducing a lot of stimulus policies in order to recover the economy in China. However, recently with the latest stimulus, people do expect more from the government itself. So the latest China stimulus actually disappoints the investors, and we can see that the stock market in China and also Hong Kong did not rally afterwards and is still staying sideways, waiting for further more stimulus announcement from the Chinese government. And lastly will be the Nvidia earnings. So how many of you monitored the Nvidia earnings? If let's say you are monitoring the Nvidia earnings, you may type me in the chat as well. So Nvidia earnings, recently they do beat the expectations. They did well in terms of their AI market, the data center market. They did well in their gaming market. They did well in their graphics card markets. They did well in everything they have in their annual report or their financial report. But market do expect more from Nvidia. So when Nvidia announced their upcoming quarters outlook, the market actually sell off Nvidia stocks. If you notice the earnings, the price action has been weaker than usual. Even though they beat their expectation, they have been doing well in their data center revenue. But people or investors do expect more from Nvidia itself. All right, so after they announced the outlook, people seems that even though it's a good outlook, but people seems that expect more. Hence, the stock price did not show much rally from the outlook from the earnings report. So let's take a look on the upcoming key events that potentially still move the market. So as we know, we are approaching December. We are now at the end of November, and December there will be a series of central bank meetings in upcoming December next month. So we have the FOMC, we have the Bank of Japan interest rate announcement, we have the European Central Bank announcement, and also People's Bank of China to announce their interest rate as well. So why I say these are important events that potentially move the market, because as we know now, US in a rate cut cycle, and if let's say they are rate cut, if let's say the US rate cut slower than the rest of the world, it will mean stronger dollar. It means that dollar will be stronger. If let's say US cut faster than the rest of the world, it will be weakens the dollar. But now based on the situation, it looks like the US Fed may slow down their rate cut, because in terms of inflation, US still higher than the rest of the world. I think it's around 2-point-something%, while Europe already near to 2%, and UK is below the 2% region. And rest of the world like China are way behind, is 0-point-something in terms of inflation. And in China, it's a different story. They are having a deflationary issue. While if you compare against major economy like US, Europe, and UK, US inflation is the highest now. And if compared to Japan, also Japan inflation are higher. So this one, Bank of Japan interest rate are also important. But in the past few months, we do have a concern about carry trade, but with the stronger dollar now, with the Donald Trump winning the election, the carry trade risk seems to be lowered now, because strong dollar, in the past we know that the carry trade happens because of dollar are weakened too fast and people are closing position, especially they invested in the US market with Japanese yen, with loan in Japanese yen. So during the August time frame, when dollar weakened too much, this caused a lot of investor panic and close their position in the US investment and close the trade and move back to Japanese yen. But now the situation seems inverse. Stronger dollar and US economy indicators also shown some strong jobs data, and also at the same time sign of inflation rebound. This cause Fed may slow down their interest rate cut, and this may make the dollar stronger. Later on, I will share also why stronger dollar may not be a strong catalyst for the market. It may be some of the negative factors for the stock market as well, because strong dollar do affect US export as well. So the upcoming central bank events may move the market big time if let's say there is some surprise from all these central banks. All right, and the second key event will be the Trump's potential first 100-day agenda. So as we know, Donald Trump just won the election and he may inaugurate in around January time. And also at the same time now, he's speaking his leaders and also cabinet. So the first 100-day agenda is important to watch out for, especially if let's say he announced any new view about his first 100 days policies. For example, how many of you recently heard of he's planning to announce a national emergency in order to do the mass deportation of illegal immigrants? You may type in the chat as well. Or how many of you heard about last night he planning to further increase the tariff for Mexico and Canada, and also increase tariff for China? You may type in the chat as well if you heard of this news. So the upcoming Trump's policies or his announcement may be key factors that can be able to move the market. All right, so with all these factors around, we know that Trump won the election, market has been bullish, but we also have some negative factors like stronger dollar, slower China stimulus. At the same time, also potential slower rate cut by the Fed itself. And recently, Nvidia earnings also people have higher expectation, hence the stock not taking off. So what investors and traders can do then? So our view will be likely the market to remain bullish until December's FOMC. So for the next half month, we do see that the market may remain bullish because it's based on the seasonal patterns. November tends to be a good month. December also tends to be a good month. But the upcoming FOMC may move the market because if let's say the Fed gives some surprise forecast or outlook for the next year, then it may move the market big time. Because usually in December's FOMC, the Fed may give some projection for the next year economy and also the projection of their rate cut progress and so on. So they may give projection of their interest rate, may give projection for their view on unemployment. They also may give projection on the upcoming GDP for the coming years and so on. So the December FOMC is important. And also at the same time, like I mentioned earlier on, we do see a strong dollar and also rising treasury yield. And why strong dollar, why a rising treasury yield is because potentially likely Trump going to introduce some inflationary policies, and this caused some concern from the market whereby a rebound in inflation may cause the Fed to slow down the rate cut. So, however, in another positive view will be if let's say people do see inflation coming back, which means consumer market or consumer confidence are still there. People still willing to spend on the goods. So there's a positive and negative side for this. I will share that later on during the opportunities and risk slide during the next few slides. All right, and what traders can or investors can do is you may focus on the sector that will be benefit from Trump's policy. For example, tax cut. What are the sectors or companies that potentially benefit from the tax cuts? Let's say Trump do deregulations. So what are the sectors, what are the industries, or what are the companies that are potentially benefit from the deregulations? And also same time, mass deportation. As we know, mass deportation is one of the Trump's agenda, or maybe restrict the border or tighten the border control. So what company or what industry likely to benefit from it? And also tariff. If let's say US go ahead and tariff Mexico, Canada, and also China. So what type of company will benefit from this tariff? All right, but before I review all this, let's take a look on the stock market performance over the past month. So this was the snapshot as of 22nd November. The duration is around 10 years. Let's take a look on how the other markets performing over the past 10 years. And because as an investor, we want to look at the big picture first, and also we want to compare between different stock market because we want to choose the most consistent market in order to increase our success rate in investing. So first of all is the Nasdaq 100, which represent the top 100 tech stocks in the United States. So over the past 10 years, the return was around 480% and average return is 48% per year. And as we know, the US S&P 500 represent the overall United States stock market, and the 10-year returns are quite good as well. But what I want to mention here is both Nasdaq 100 and also S&P 500 are now near all-time high, and they are likely to remain bullish until the next FOMC. All right, so after the Donald Trump's victory in the election, we do notice that the finance stock, those in the financial sector, for example, like all these big banks, all these regional banks are outperforming the tech stocks. And among the tech stocks, the software sector were the strongest. Software sector, I repeat again, software sector were the strongest. Potentially because of finance stock is more beneficial from the deregulation, and also software stocks are less likely to be affected by all these tariff and also uncertainty. Because as we know, if let's say Trump imposed tariff on the semiconductor, or Trump imposed tariff on China, it may likely affect semiconductor, and semiconductor has been outperforming the rest of the sector since last year because of the AI trend. And recently we do see it's slightly weakening because of some sector rotation ongoing, and we do see that money, or there's some rotation into finance stock and also the software stocks. So you can monitor these few sectors and wait for a pullback in the stock market to capitalize on the opportunity, because there are still good finance stock out there, especially those from fintech, financial technology, fintech industry, or those software companies that are still fundamentally strong and have a lot of exposure in the software market and also the AI trend. All right, and if we take a look on China, China recently has been going sideways. It has been weak after the latest stimulus announcement, and the economy in China still slow. So how many of you heard of the property crisis in China, the overhang or oversupply issue in China, and also the foreign funds has been going out from China, and factories are moving out from China, and there are high unemployment in China. All right, even though China announcing the stimulus, they had the stock market do rally back then in September, but in the recent stimulus, looks like the announcement was disappointing for the investor, and the market actually slowed down the rally and now going into a sideways. We do see that China market may recover, but I would say it's a very long-term recovery, because as we know, there is still a trade war or tech war between China and US, and foreign funds continue to move out. And if let's say Donald Trump go ahead with the tariff, it may even cause more foreign funds to move out from China. So it may take a longer time to recover. And also, even though China government are doing a lot of policies, for example, they encourage the internal consumption, we do see that in order for China market to recover, consumer confidence need to be recovered. Because as we know, people in China now are losing their jobs, and they are having a high property debt. So the spending power or the consumer confidence in China are not so strong for now. So in order for the stock market in China to be recovered, likely the consumer confidence need to come back first before the stock market take off. So do monitor the inflation situation in China. China currently, their inflation is around 0.something%. We may want to see the inflation continue to go up in order to see that more solid consumer confidence are coming back. All right, so the follow-up stimulus in China actually disappoint the market, like I mentioned earlier, and the market actually still going sideways and going nowhere. But you may monitor the market if let's say any further stimulus come in and the stock market continue its recovery. But having said that China having a lot of stimulus, we do see that the stock market in China are easily affected by the government policies. So you can see China stock market in the past also behave the same behavior. If let's say you go back in 2015 also the government launched some stimulus and the stock market take off in a very strong bull rally. But after that, you do see that there is a significant sell-off and going sideways for so many years. All right, and China market itself is a volatile market. It always comes with a big ups and down, like 2015 to 2016. You can see a big up, then big down. Then after that, over the years, you can see certain time frame of a big rally. Then after that, followed by a strong sell-off. So this round, investor or traders may need to be cautious as well, because we may see that if let's say the upcoming stimulus or upcoming announcement by government disappoint again, it may cause some sell-off, or it may cause the stock market to go sideways for a while. So as an investor, let's say you are investing for a long term, I would say we want a more consistent market, or we want a more predictable market. All right, so China market itself is easily affected by the government policies, and also the company itself also may easily affected by the government's policy. For example, recent case, we have Alibaba, we have Tencent. So if you are invest in China, you may need to take note of that, take note of all these potential risks. Even though China market the valuation looks cheap now, but the policies itself or the situation itself may not favor the stock market for now. All right, and next one, let's take a look on China. After that, let's take a look on Hong Kong. So Hang Seng Index in Hong Kong also over the 10 years has been in a downtrend and is highly affected by the China market, and also at the same time, it also affected by the global markets because as we know, Hong Kong is a financial hub as well in Asia, so it also affected by the US market. And recently, the stock chart for Hong Kong market also shown similar consolidation pattern or sideways pattern as China is still waiting for further follow-up of the stimulus. So I would say Hong Kong market also highly affected by the China market. China markets are also at the same time having more retail traders in China, and this caused the stock market to be more volatile. Even though Hong Kong have higher institution participation, but their economy are highly affected by the China economy. And after the Hong Kong go back to China, I think the economy are quite closely tied together between Hong Kong and China. Hence, China's market may move Hong Kong market, and Hong Kong market may be affected by the China market. But at the same time, also Hong Kong, because of the exposure to foreign trades and it's a financial hub, they also affected by all these geopolitical tension between US and China. So I would say China and Hang Seng Index not a good market for investing for now. For long term, maybe yes, if let's say you are knowing what you are doing, you're looking at the different type of investment. But I would say in the short term or mid term or even the next 3 to 5 years, I would say it's not a very good market to involve in because of the geopolitical tension, even though the valuation are cheaper. But for trading, you may need to do your own due diligence and select the right stocks. And lastly will be the FBM KLCI. So FBM KLCI recently, even though early this year we see a rally in FBM KLCI, our local Malaysian stock market, but recently the uptrend momentum has been dropped, and also it has been a pullback to an important support. We do see a mini downtrend there. I would say not mini downtrend, a short-term downtrend in the stock chart itself for FBM KLCI. And why FBM KLCI has been weaker recently, we suspect likely due to the strong dollars. All right, with strong dollars, usually emerging market will tend not to do well. For example, if let's say you see during a strong dollar rally, market in Southeast Asia, in Asia tends to be weaker. So the same case for recently, I think because of the strong dollar, foreign funds are moving back to the US stock market. Hence, we see a weaker KLCI as well. So from the overall comparison, which market provide the most consistent return? You may type in the chat as well based on your observation, based on the 10-year stock charts, which market provide the most consistent return? And for investor and yes, US market. So for investors and traders who are looking for high growth, the US market still will be more preferable because they have more high growth companies, and also at the same time they have strong drivers in US. For example, recently we see AI trend. And we see all these cloud computing trend, fintech trend. So most of the companies we heard from AI, cloud computing, or even fintech. Fintech is like all those financial technology, like all these PayPal, Square, or Stripe, and so on. All these companies of, for example, AI, Nvidia, Microsoft, Meta, all these are from United States. So any other AI or cloud computing company you heard of from US, you may type in the chat as well, other than Nvidia, other than Microsoft, Meta, other than Square, PayPal. What else company you heard from the US, you may type in the chat as well. Yeah, Amazon, we have Google. So all these companies are from the US. And usually we see that all these companies have a better earnings growth. And also at the same time, we do see that their earnings results are more predictable because they are the global brands, they sell to the world. All right, they are the major exports of US products and also US services. Okay, so next one, an important slide. So what are the Trump's potential policies and what is their impact, or what are the impacts? So first of all, we'll talk about tax cut and also tax reduction. So what happened if let's say Trump go ahead and implement the tax cut, or I would say the House and Senate go ahead and approve the tax cut and also the tax reduction? So the first effect we see is green color means positive. So we see that potentially more stock buybacks by the companies, especially those with strong fundamental. So why I say so is if let's say you are a strong company and you get the tax cut from government, so now you have extra cash. So when you have extra cash, you can actually do more stock buyback and give the return back to investor. So when companies do stock buybacks, it tends to reduce the share outstanding in the market, hence the stock price likely to go up. And this is another way of giving dividends to investor. So if let's say the government go ahead and do more tax cut or tax reduction, this may cause more stock buyback by all these strong fundamental companies, for example, like those mega cap like Apple, like Google, and so on. If let's say they have a lot of cash and they have extra net income after the tax cut, they may use the additional cash or additional income to do stock buyback to reduce the share outstanding and indirectly push up the stock price and give some return to the shareholder. And the second thing will be second positive factors will be tax reduction for local manufacturers. As we know that Trump potentially may reduce the tax for local manufacturers as well. If let's say you build your products, you manufacture your products in the US, the tax policy, they may get the beneficial of tax reduction because manufacturing in US. And this may benefit all these companies with factory in US, for example, like Tesla, like for example, Ford, or even GM, or even 3M, even Triple M may benefit from this because if let's say they have factory in the US, they may get the tax cut. And at the same time, also, it may cause a lot of companies to move their manufacturing back to US as well, because with the tax reduction for local manufacturers, then other companies that previously set up their factory or set up their manufacturing in other countries like Asia, Mexico, or Canada may tend to move their factory back to the US as well. Hence, it may cause a supply chain movement as well. Just like how US companies move their supply chain out from China because of the trade war, because of the tariff. So if let's say Donald Trump do some policies about tax reduction for local manufacturers, it may trigger US company to move their supply chain back into the US as well. For example, if let's say originally the factory was set up in Southeast Asia, they may move out from Southeast Asia and move back to the United States for their manufacturing in order to get the tax reduction for local manufacturer. But we haven't seen the policy yet. They haven't announced the policy yet. So how much tax reduction will affect those companies to be considered whether I want to move my factory back to the US because it involves cost. All right, so if the tax reduction is attractive enough for those companies to move their factories from other regions back to the US, then we may see more supply chain movement from the US companies, especially for their manufacturing. And having said that, all these positive factors, tax cut or tax reduction do have a negative factors as well, and it's inflationary policies. So it may cause inflationary concern, and people may foresee the Fed may slow down rate cut if let's say inflation rebounded in the US. All right, so these are the side effects of, not side effect, but these are the positive impact and negative impact for the tax cut or tax reduction. And next one will be the tariff itself. So we know that Donald Trump, before the election, during the campaign, he mentioned about 60% tariff on China and 10% on other regions. All right, so how does this impact to the industry or sectors in the US? I would say mostly a negative factor. So first of all, semiconductor industry may be affected. As we know, semiconductor itself have a lot of, semiconductor companies do have a lot of exposure in China. For example, if you dig into annual report for Nvidia, AMD, Qualcomm, or even like other companies like AMD, they do have quite a numbers of exposure in China. Because China in the past, as we know, is the manufacturer for all these electronic devices. So if let's say more tariff on China, it may cause the semiconductor industry to be more volatile. And also all these sanctions and bans from all these AI chip may also cause those companies having some more volatile period. And next one will be the higher import cost. So if let's say Trump go and impose all these tariff in China and rest of the world, then US import will be more expensive. If let's say US companies that are importing from other countries, they may incur higher costs. All right, so this may affect the profit margin for all these companies. And also at the same time, other industries may be affected, for example, US exports. So those companies that are selling to rest of the world rely on foreign revenue, always sell to, rely on revenue from China, rely on revenue from rest of the world. Those companies that rely on export may be affected. And also there might be China retaliation on all these tariffs. For example, as we know, China is one of the big export for all these rare earth material. So all these rare earth material are required for high-end devices. For example, all these electronic devices like your smartphone, smart TV, computers, all need rare earth material, and also batteries. For example, EV, laptops, all these green energy equipment all need rare earth for their battery as well. But their battery need rare earth. All right, and also the high-end stealth fighter in US, the high-end missiles, all these need this rare earth material in order to build all these products. So if let's say China retaliate, US may need to source the rare earth material from other countries, and this may cause supply chain issue in the US as well. So if let's say some China retaliation, this may cause some negative effect in US as well. But one thing positive about one of the industry may still benefit from tariff will be the software companies, which I will share in the next slide. And next important policies will be deregulation, and this may benefit those highly regulated industry like finance sector. All right, so finance sector, as we know, are quite highly regulated after the economic crisis and impact in 2008. So if let's say Trump were to deregulate, then it may benefit all these banking industry, finance sector, and also at the same time, as we know, Trump favors crypto this now. So crypto ETF, crypto exchanges may benefit from these deregulation policies as well. So we may need to monitor further if let's say any deregulation policies announced by Trump, because he haven't inaugurated. So now the president still Biden. By January, we should see Donald Trump step into office and he may announce policies from time to time. And the last big potential policies will be the tightening of borders and also mass deportation. So what are the side effects for, what is the impact for all these policies will be? All right, first of all will be industry that is sensitive to labor costs. So what industries are sensitive to labor costs? You may type in the chat if let's say you heard of some. So our view will be all these home builders, for example, the construction company, Then next one, the restaurant chain, and also at the same time hotels and resorts. So all these usually they hire they are quite sensitive to the labor cost. For example, home builders, they need builders, and for the restaurant they need the waiter and waitress, and also at the same time hotels they need all these cleaners and so on. So all these may be negatively affected by these policies. And also at the same time, Trump may go and limit the visa for skilled workers or skilled immigrants, and this may affect the Silicon Valley companies like, for example, Microsoft, Meta, Google, Amazon, and so on, because as we know, these companies hire their skilled talents from overseas as well, especially from India and rest of the world for their software engineers or their scientists and so on. So if let's say Trump limit the visa for skilled immigrants, this may boost up the demand for the skilled workers in the local US, and also may cause the salary for the skilled workers to be go up. So this may negatively affect all these Microsoft, Amazon, Apple, and so on, because all these skilled talents now will get higher wages because of the high demand. If let's say they cut off the supply, like importing foreign talent, then the company need to offer higher wage in order to get the local talents, or at the same time, yet there will be a limited pool of skilled talent in the US because of the restriction in the visa. So this may boost up the cost for all these companies. And what are the industries that are positively impact or may positively impact from all this tightening of borders and also mass deportation? Will be those companies that are beneficial from all this increase in public safety spending. All right, as we know, if let's say you were to tighten your borders, you need to hire more border patrol, you need to hire more police, you need to hire more staff for the immigrant department. So this may increase the spending for all these equipment, for example, border patrol equipment, communication device that required during the border patrol, or all these security camera that are able to monitor the borders and so on. So all these companies or contractors that sell all these devices or services to the government may benefit from this spending. All right, and the lastly will be the most important slide. So after I present all these factors from the stock market, what are the potential policies from Trump, and also what is their impact? So what investor can focus, what to focus? So as an investor, usually we start with the risk first, because we want to understand what are the potential risks out there before we go into the opportunities. So first of all will be the inflation trend and the potential slower rate cut, like I mentioned earlier. If let's say inflation rebound, slower rate cut means stronger dollar and stock market may be affected. And second point will be slower global growth. So we know that China still slow down, the economy still slow. In the Europe, UK region also GDP growth are still slow. And the recent China stimulus also doesn't seem to recover the economy in China strongly. And this caused overall the slower growth in the global market. But we do see that US, based on their economy data, they are still stronger than the rest of the world. Hence, funds may move back to US. All right. So if let's say US economy relatively still stronger than the rest of the world, and we do see a stronger dollar, and this may affect the funds that are investing in the financial market to move back to the United States for now. And also at the same time, because of the global slowdown, we do foresee potentially a lower earnings growth for companies in the global stock market. All right, but for the US, because of the inflation still high, it also tells us that the consumer spending are still strong. So for the US, it might be different case, but for the rest of the world, we do see that a potential lower earnings forecast. And lastly will be for the slower growth portion will be US unemployment trend. All right, as we know, in the past 2 months, this unemployment trend has been raising a concern, but recently it seems that it's recovered. It's been slowing down back, coming down back. So we may need to monitor the trend for unemployment in the US as well, or any sign of a weakening in the US economy. And the third point will be geopolitical tension. With Donald Trump coming in, we do foresee that the war in Europe may end soon if let's say Donald Trump step into office, because during his campaign, he mentioned about he can stop the war in 24 hours, which is a big word. All right. So the war may be slowed down, and even though Biden recently approved some green light about the short-range missile, tactical missile launch into the Russia region, but the retaliation from Russia so far, we do see that Putin are giving face to Donald Trump. I would say giving face to Donald Trump because new president are stepping in. So the retaliation from Russia still moderate for now, but we may not. It's not 100% that if they want to escalate the war further, but for now, based on the situation we see now, is like potentially both sides are waiting for Donald Trump to come into office, even though now the war there is escalating because of people may want to capture more land as a bargain before any peace talk coming in. As for the Middle East, we do foresee that Donald Trump may also stop the war in the Middle East. And with Donald Trump stepping into office, the geopolitical tension may focus on China, US, and also Taiwan in the Asia region. All right, so more tariff and potential supply chain disruption. And also, Trump recently assigned, I would say, looking for new FCC leaders, and the leaders are quite anti-big tech, according to the news. So this may affect big tech as well. So how Donald Trump built his government or built his cabinet, we may continue to monitor, because certain candidates against the big tech, so we may want to monitor the reaction from there. These are just a potential risk, doesn't mean that the stock market will behave negatively, just we want to be more cautious, especially to not overexpose in the big tech. All right, and lastly will be the strong dollar. So a strong dollar may cause volatility in the stock market because, as we know, US economy also have a lot of exports to the rest of the world. So strong dollar may cause some of the company, like for example, those rely on exports or have high revenue exposure from other countries. So when you choose stock, need to be more cautious, and with strong dollars, stock market may get volatile if, let's say, the dollar went too strong. All right. So this one may need to take note of, but it's just a potential risk out there. And having said all the risks out there, let's take a look on opportunities. So first of all, will be sectors that are benefited from the Trump's potential policies, like I shared earlier. All this deregulation, tax cut, tax reduction, move manufacturing back to US, and also at the same time, all this deregulation of finance sector, crypto, and also some, I think the manufacturing also benefit the industrial industry as well. Those industrial stocks may be benefit from it as well. So you may do your research on this direction. And also opportunities will be those industries that are aligned with mega trends. So what are the mega trends? Mega trends are the big trends like AI, cloud computing, and also like fintech. So fintech, as we know, if let's say deregulation happens, this may be a good catalyst for all these fintech companies. And next one will be the upgrade cycle. So for example, the last upgrade cycle for electronic devices was back in 2020. During COVID, a lot of us buy new laptop, new smartphone because there's a lockdown. And now we have 5 years past the lockdown. It's time for an upgrade cycle. But usually, when consumer upgrade their devices, is 3 to 5 years. But because of the economy slowdown and also the Fed raising the interest rate in the past, consumer spending has been slowing down in the US. We do foresee that maybe in the next few years, like 2025 or 2026, people may proceed to upgrade their laptops, smartphone, and so on because of the AI-driven upgrade. For example, nowadays you do see AI laptop, AI smartphone with all these different AI feature. And if you are using your old device with all these AI feature, you may stumble upon your computer are getting slower and slower, or your smartphone getting slower and slower because of all these AI feature introduced in their new software. So the upgrade cycle may come in soon, and if they say it's coming in, then it may benefit all these consumer electronic company like Apple, all these chip-based company like Nvidia and also AMD. Or when let's say laptop sales coming back, then it may also benefit Microsoft and so on. So we may continue to monitor this spending behavior from the consumer, and if let's say you do see that the forecast for all these consumer spending are coming back, then it may be beneficial for the stock market. And the third opportunities will be companies that are less affected by tariff, for example, software companies. All right, as we know in the past, during the introduction of tariff, most of the tariff are introduced to the in the hardware products, for example, semicon electronics, or tariff like imports from China and so on. So software companies in the past were least affected, especially during the last Donald Trump term. So this round, you may monitor software companies as well, because recently we do see that software companies has been rallying as well. So we do see that potentially it's because of the Trump effects and also potentially some rotation from the semicon back into the software industry. All right, and when you're selecting all these software companies, make sure they are low debt and also having a strong cash flow, or choose those companies with strong fundamentals. And lastly will be companies that are potentially benefit from the rate cut. So as we know, rate cut happens now, and home builders tends to benefit from it. Home builders time to time may stumble across the negative news of the the mass deportation. So if you are invested in home builders, do watch out for this. And also small caps, for example, all these small cap in the US, the ETF is IWM, Russell Index ETF, or finance sectors, like I mentioned earlier, have double benefit, rate cut plus the Donald Trump with the deregulation, and consumer discretionary spending also because of if let's say rate cut, then people may get cheaper loans and cheaper credit card interest rate. So consumer spending may come back, and also travel related stock may come back as well. All right. So travel related stocks, for example, like all these airlines, cruise companies, travel companies, or this travel app may benefit for the travel recovery as well, because when people have more disposable income, they may have more spending. All right. Okay, so with all the opportunities I mentioned here, especially mega trends, AI upgrade cycle, and all this uncertainty in the market, we do have a symposium coming on 18 January 2025, where we'll invite speakers, industry experts, and also panelists to talk about the stock market outlook, navigate the mega trends, and also how you can take advantage of all these mega trends, and also all these opinions or inputs or sharing from the speakers and also industry experts. And this event will be a physical event. The venue will be at Nexus Bangsa South. If you are interested, you may click on the links our admin share in the chat. And also for our students, you may get the student price. Do refer to the link in the symposium or in your email. All right. So for those that are in this market update, if let's say you're interested in this symposium, you may you may click on the link I shared. Our admin just shared. You may click on the link to register. And for our existing students, if let's say you're already our students, you may use the referral link in the latest symposium email for student price. All right, so with that, if you find the market update is beneficial to you, do recommend it to your friends. And now I'll open the floor for question Q&A, and I do see 2 questions coming in. So first of all, what about Singapore stock market? All right, so Singapore stock market, yeah, as I see recently is in at the all-time high. And Singapore stock market, if I'm not an investor in Singapore stock markets, but in general view, what I know about Singapore market will be Singapore are investing a lot in AI. And according to their AI strategy, they plan to become one of the AI leaders in the stock market as well. And yeah, you may check whether any catalyst that causing the Singapore stock market to be at an all-time high. We do see that recently China rally is because of stimulus. US rally because of the Donald Trump effect, deregulation, and also they are still strong AI companies there. Singapore, for now, I have limited view on it because I did invest in Singapore. But if we do find out any key catalysts, I'll update it in the next market update. And next question, how about retailers? Are they highly dependent on foreign workers? All right, retailers, there are 2 types. One is online retail, one is a brick and mortar stores. All right, so for retailers, they may be more affected by the import, I would say, because retailers, as we know, if let's say it's like, for example, those companies like Dollar Tree, Dollar General, or even like Raw Store and TJX, they are rely more on imports because they are importing clothing, importing stuff to sell to the lower end consumer. So they are more sensitive to the import, to the tariff. But what about the wages? I would say if compared to construction, if compared to home builders, if compared to restaurant and hotels, it will be less dependent. So I would say retailers might be, you may want to see, depends on whether the retailers itself is online retailers or physical retail. Physical retail, then yes, they may affect by some of the foreign workers' costs. But in recent trend, we do see that a lot of self-checkout services nowadays, so they may not be highly affected. All right, so the third question, what are the examples of software companies different from AI companies like Microsoft and Intel? All right, so some of the software companies like NOW now, and for example, software companies like CRM, Oracle, all these are software companies. All right, other than Microsoft, these are the software companies like, for example, Adobe, also a software company. So you may do your own due diligence, study their fundamentals, and see how their revenue exposure looks like. All right, for example, like Adobe, CRM, Oracle still are good software companies, or ServiceNow. ServiceNow also is a good software company. All right, you may go and evaluate the fundamentals of the companies and see which one is the most suitable one, or which one are the less affected by the Donald Trump policies and so on. All right, so how high is possibility of Mac 7 stock pullback within these 2 months? I would say recently we do notice that Mac 7 are weaker than the rest. We do see that funds are shifting. There are some sector rotation ongoing or industry rotation ongoing. Funds seems to be moved into finance stock, small cap, and also software companies. While the weaker one will be all these semicon company and the Mac 7. Among Mac 7, some are still strong. For example, like Tesla still strong and Apple still strong. So you may want to check out those are still showing relative strength or showing that relative momentum, which are in line with the market. All right, but some of the companies may be affected. For example, Google affected by some antitrust law nowadays because of their dominant position. Then they are involved in some legal issue now, and this affected Meta because Meta also in the similar industry. So you do see that Google and Meta are weaker recently. All right, and lastly, lastly is SDI. All right, due to robust economic fundamental. All right, so Singapore, I'll take note of that. Whether Singapore is an attractive market as well. And lastly, is Palantir a software company? And yes, Palantir is a software company. They are AI company as well, and they are government contractor, and also they are private sector contractor. So what they do in high level is they do a lot of predictions according to the data in the situation. So usually they support military to predict what are the potential target. They help all these healthcare company to predict certain things, certain data that for AI to use. And like I mentioned, one of the border tightening beneficial will be those contractors with government. And Palantir is potentially one of them because they also involved in border patrol projects. For example, if let's say US to tighten their border, they need AI software to analyze a lot of video camera or security cameras. So this may benefit Palantir or help the US border patrol to predict which area to pay more attention to and so on. This is just my assumption, but yes, Palantir is a software company and involved in AI. All right, with that, I hope answered most of your questions, and I have been overrun by 15 minutes. Hope you guys benefit from all this information. And yeah, lastly, is there any positive outcome if Google comply with DOJ? Well, I don't know the future, but it looks like they may need to comply in some of the requests from DOJ, and it may affect their revenue. All right, so with that, coming towards the end of my market update. Hope every one of you prosper in the stock market and see you again during the next month market update. All right, with that, bye-bye to you all.